and welcome to another episode of Always Up to Date. I'm Denise and this is Yahweh, and we are co-owners of Always Bookkeeping. And today we are going to be talking about how to pay your shareholders. So our quote today is from Robert Kiyosaki, who is the author of Rich Dad, Poor Dad. And the quote that we have is, "Good debt is a powerful tool, but bad debt can kill you." And the statistic is from the Fraser Institute. The average Canadian pays 43% of income in taxes. So that's your tax, CPP, EI, GST, fuel tax, etc. By comparison, on the average, only 37% of the remaining income goes towards basic necessities. So things like shelter and food and clothing. Yahweh, we often see clients that come in and they're all excited. They have a business idea and they've incorporated and they're all ready to start their business, but they really haven't considered their personal circumstances. Mm-hmm. So the circumstances of the shareholder is going to determine the resources that are available for the business and what's required to be withdrawn from the business and for the shareholders to meet their personal obligations.
Yeah, absolutely. So one of the questions that we always encounter is, why is it important to know the personal circumstances of the shareholder?
Yeah, why is that important to know the personal circumstances? So like I kind of said in our story, the personal circumstances of the shareholder are going to determine the resources that are available for the business. Maybe you have a shareholder who has money they don't have to draw from the business. Maybe they have another job that they're doing, a T4 job that they get paid, and that will cover their personal expenses so they don't have to draw. Maybe they're depending on the business to pay for their personal expenses, and so they're going to have to draw money. So we need to take all of that into consideration to decide what exactly needs to be drawn from the corporation.
Yeah, absolutely. And especially for small business owners who just started from being an employee, transitioning into a small business owner role. You are the business and you want to make sure that, the business can sustain you and your family while you don't have any other income that's coming into the household. So that's why it is personal. I know there's a misconception that business is always going to be separate from your personal life, but really, if you're the only person that's operating the business and the business is the only one sustaining your household, they are kind of linked together.
Yeah,
it's something that you can't really separate from each other.
Yeah, that's right.
How do I know what the personal circumstances of the shareholder are?
Yeah, good question. So how do you figure out what the personal circumstances of the shareholder are? The best way to do it is to do a balance sheet and an income statement personally. So you want to try to figure out your balance sheet and your income statement based only on your personal information, your personal assets and liabilities and your expenses. So very similar to your business, you want to figure one out for your business. You also want to figure out the balance sheet and the income statement for your personal life.
Sure. And your balance sheet is just similar to your personal net worth if you guys are not familiar with the balance sheet. So it just lists all your assets and any of your debt really. What should be included on the personal balance sheet?
So like Yahweh just said. So you're gonna start with just like in your business, you want to start with your assets. So if you own a house, if you own any vehicles, if you have RRSPs or TFSAs, anything that you own or that is an asset to you, that's going to start your balance sheet. Next, you're going to have your liabilities. So you have a house, you own your house, but you have a mortgage on that house. That's going to go as your liability. You have a couple of cars and there's loan payments on those cars. Those are liabilities. Credit card debt, if you have a line of credit that has a balance outstanding, anything like that are liabilities.
Personal tax debt, loan to your family, stuff like that goes in there too. So you want to see how much this will show you how much resources you will have
Yeah.
that you will be able to, let's say, take out from your personal life and put into your business if necessary.
That's right.
Yeah. What should be included in a personal income statement?
So the personal income statement, again, very similar to your business. The biggest difference, I think, between the personal and business is you don't have to be quite as detailed with your personal. You want to start out with the expenses that are fixed. So your rent, if you have, I don't know, your utilities, I guess, things like that, that you know they're going to be the same or very similar every month. And they're things that they have to be paid. Like, you always have to pay your rent no matter what your circumstances are.
Yeah.
And then you want to do sort of your variable expenses, things that, you can change each month, food, entertainment, things like that. But I think a lot of people get caught up in very detailed, like, I'm going to have $100 for, meals and entertainment. And I'm going to do you just kind of need a ballpark figure of how much you're going to spend in those variable things. You don't want to spend a ton of time on that.
Yeah, absolutely. And the thing that helps the most about doing this exercise as well is you kind of have an understanding of how much you really need and what you can cut, especially on the variable cost.
Yeah.
You'll be able to tell which items you can decrease on the personal side or limit on, especially if you have limited resources coming from the business or other, you won't be able to take out any money from the business and you'll be living from your savings. So that's important to know. So whatever figure comes out of that income statement exercise that you did, we'll figure how much you really need on a monthly basis from the corporation or from your other sources of income to be able to survive until your business can afford you.
Right.
Yeah. So can I have one bank account for my personal and business?
So you can. There's nothing wrong with that, really. If you have one bank account for personal business, we would recommend being very diligent in keeping track of what's business and what's personal. However, we definitely recommend that you have two separate accounts. You have one bank account for your personal and one for your business. And we would recommend just using the personal for personal, business for business. It's so much easier for year end, so much easier for your bookkeeper, your accountant, and also at CRA if they ever question the expenses. It's very clear. This was my personal, this was my business. So we would recommend having separate accounts.
Yeah, it gives them the idea that you know how to separate those things so there's a bigger argument that anything in a business account will be strictly for a business and
That's
it
right.
would be less likely to get rejected for an audit.
Yeah.
Can I have one credit card for my personal and business?
Yeah. So the answer is pretty much the same as the bank account. You can, but again, you're going to have to keep track of which is business and which is personal. And if it's ever questioned by the CRA, you're going to have to be able to prove that it was actually a business expense and not a personal expense. A lot of clients that we get want to use their personal card because it has points. They can get the points for it. And we recommend getting two. You know what? In the long run, the points aren't that big of a deal. Go buy yourself a vacation if you want a vacation. It's going to save you a lot of headache in the long run if you have two separate credit cards, one for personal and one for business. And again, don't mix the two. Don't use your personal once in a while for business. Always use the business for business and the personal one for personal for the same reasons as the checking account.
Yeah.
It just makes it so much easier to keep track of which is legitimately your business expenses.
Yeah, and it helps a lot too in a sense that if you're not doing your bookkeeping, if you have a separate business account, when you don't have employees and you're not doing your bookkeeping, your bank account basically gives you an idea of how your cash flow is doing.
Yeah.
So just looking at your bank account, if it's if it's mixed with your personal transactions, then it's going to be a little hard on or hard to see how your business is doing just looking at your bank statements.
Yeah.
Yeah.
That's right.
How should I take money out of the corporation as a shareholder?
So you want to take the money out of the corporation when you're a shareholder. We recommend doing it on a monthly basis, and we also recommend trying to do it in round numbers. So if you need $3,000 a month for the corporation, take $3,000. Don't take $3,200 or $3,250.25. Just take a round number. It's just so much easier. We can see those amounts every month and know that's exactly what it's for.
Yeah, absolutely. Should these funds be a salary or a dividend?
Yeah, so again, it goes back to your personal circumstances. Just a reminder that anything you take out of the corporation is going to be taxed. Our boss often talks about, if somebody can tell you if it should be a salary or dividend right away, they don't really know all the information. It's best to do it as a mix of salary and dividends. But again, it depends on what happened throughout the year in the corporation, what your personal circumstances are. There's so many different ways of dealing with the salary or dividend.
Yeah, for sure. And the key is to find an accountant that will actually do the exercise of looking on what the best way to pay you is. Because most of the time you'll go into, let's say, an undesignated accountant that you only see during your year end that doesn't really review your financial statements. They will just close everything to salary because first of all it's going to decrease net income and it's going to decrease the tax payable. But at the same time, you could be getting taxed a lot more on the personal side, and they don't know that because they don't know your personal circumstances. So yeah, the key is finding a good accountant that will do the exercise to look at what the best salary and dividend mix is for your household.
That's right.
Yeah.
And one thing that I forgot to mention too is that when you draw the salary, you can do it anyway. Like if you do an electronic funds transfer, that's fine. If you do write a check, you don't want to put salary on the memo line. Just put shareholder draw or whatever. If you put salary, then your accountant is going to have to put it as a T4. Where if you just put it as a draw at the year end, they can decide how much is going to be salary and how much is going to be dividend.
Yeah, for sure. And again, I forgot to mention your draws will come from that exercise that you did from the personal balance sheet and income statement. Yeah. How do I figure out how much should be salary and how much should be dividend?
Yeah, so I think we touched on this a little bit. Again, it's difficult to figure that out without all the information. First, you need to do your personal balance sheet and income statement, find out how much you're going to be able to put into the corporation, how much you need to take out. Our recommendation is finding a good accountant that can help you come up with a financial plan that will help you to know exactly how much of it should be dividends and how much should be salary.
Should I use payroll tables to figure out how much to pay the shareholder?
Absolutely not. We have lots of clients that come in and the shareholder is part of the payroll and they're having all the taxes taken off. Once you are part of that payroll, your salary becomes salary and you can't make it into dividends. It has to be taken as a T4. And the taxes are much higher on that than from your business and for dividends. And so we would recommend, again, like we said before, just take a draw each month, whatever that draw is. And at the year end, your accountant, if they know what they're doing, should be able to decide whether it should be a salary or a dividend.
And a good accountant will also give you a tax strategy on how you pay it gradually as opposed to just paying it at the end of the year. So I know some of the some business owners are scared of just taking out the draw and not being able to pay the tax on it and having to pay the lump sum at the end of the year. There is a way to just figure out how much you're gonna you're gonna be paying at the end of the year, and you can use that as a way to find out how much installments you can do each month, instead of putting yourself into a payroll and paying the remittances and not having that flexibility to have that dividend and salary mix that your accountant may be able to play with at the end of the year to save you taxes.
That's right.
Yeah. So I think that's all the questions we have. I hope you guys find it informative. If you have any questions or you have any topics that you want to discuss, please comment down below, and please don't forget to like and subscribe our videos on Always Up to Date. See you guys next time.